This secret TradingView indicator shows you the future of the price of an asset, and the crazy thing is, it is actually really accurate. In today's video, I will be showing you this new free indicator that tries to predict the exact future of the price of an asset by looking at its previous price history. Please leave a like on the video and subscribe to the channel to help us keep creating these free videos. Now that we've gotten that all out of the way, let's get into it. Let's first head over to TradingView.com, and we will be showcasing this strategy on the price of Bitcoin versus the USDT on the 1 minute time frame. Now, to actually add our indicator to the chart, we need to navigate up to our indicators tab. We will be typing in Echo, and it's this one here, the Echo Forecast by Lux Algo. Let's first try to understand exactly how this indicator works, so we'll be able to know exactly when we can use this indicator to enter into profitable positions. When you look at the indicator settings, we see the following: an evaluation window, a forecast window, forecast mode, forecast construction, and then our source. The evaluation window settings refer to the window size used for finding historical observations similar or dissimilar to recent observations. The forecast window determines on forecasting horizon. The forecast mode determines whether to use historical data similarities or dissimilarities in the recent price observations. The forecast construction determines how the forecast is actually going to be constructed. Then lastly, we have our source, which is the setting that allows us to choose the input of the forecast. Now that we know what settings are available for the indicator, let's take a look at how we can actually use it. The indicator can be used to forecast the future trends of an asset. The indicator also indicates which historical variations have the highest degree of similarity or dissimilarity. The forecasting window is orange and determines the price segment that will be used as a reference for the search for the most similar historical price segment, which is colored in green. As you can see here, the gray area is the total evaluation zone. Then the green area shows you the most similar part within the gray area when comparing it with the orange area. I hope you understand this indicator a little better. Now let's take a look at when we enter into a buy position with this indicator. As you can see here, the indicator is predicting that the price of the asset will rise. This indicates that we should enter into a buy position and place our stop loss at the most recent swing low. For the take profit target, we will be targeting 1.5 times the risk. Now let's take a look at how this plays out. Here we see that the indicator is predicting that the price of the asset will probably continue in the downtrend, so let's enter into a sell position. Our stop loss will be set at our most recent swing high, and once again we will be targeting 1.5 times the risk. Another successful trade. Even though this indicator is really good, the indicator isn't meant to be used on its own. This is confirmed by the fact that the indicator also provides a lot of false signals when we use it on its own. So let's head over to our indicators tab and add another indicator to the chart to make this strategy even more profitable. So the second indicator we're going to be searching for is our SSL hybrid indicator, which is this one here by Michael. The third and final indicator we'll be adding to the chart is our volume oscillator, which is this one created by TradingView. These are all the indicators we need to use for this strategy. Now, to optimize the indicators for the strategy, let's actually change the indicator settings. So first we will actually double click on our SSL hybrid indicator, and in our input section we will be changing the baseline length from 60 to 200, and after doing that we need to change our baseline type from HMA to McKinley. This is a type of moving average that was designed to track the market better than any existing moving average. Now we're going to need to move over to our style section, and we'll be unchecking everything but MA baseline and our bar colors. Now let's change our volume oscillator, and for this we're just going to head over to our style section, and we'll be changing the color of the line to make it a little more visible. That is all we need to actually do. Now let me show you how we will combine all of the indicators to make accurate predictions on where the price will be going. The first indicator that we added to the strategy is our SSL hybrid, and this will be our trend direction indicator for the strategy. This means by using this indicator, we can filter out trades that go against the greater trend. We also added our volume oscillator to the chart. This indicator will help us identify periods in the market where there is a high level of volume. This means that the indicator will help us filter out any ranging or sideways price action in the market. And lastly, we'll be using our Echo forecast indicator as the entry signal to know exactly when to enter into our positions. Now that you know how all of these indicators work and how we will be using them, let's take a look at when to enter into a position. So here are the rules for entering a long trade. First, the price action must be touching the top of the forecast window. If we see that this is the case, we will take a look at our forecast line. The line needs to be pointing in an upwards direction, signaling that the uptrend will continue. Now we will need to take a look at our SSL hybrid indicator. The candlestick color will need to be blue, indicating that we are currently in an uptrend. To make sure that there is enough volume in the market, we're then looking down towards our volume oscillator. We will know that there is enough volume if the line is positioned above our zero level. Before entering into a position, we first need to make sure that the forecast line won't be hitting our stop loss before it hits our take profit. To make sure of that, we need to use our long position tool to map out the entry. So we'll be entering on the close of this trigger candlestick. Our stop loss will be brought towards our most recent swing low, and we are going to be targeting 1.5 times the risk. As you can see, according to the forecast, our stop loss will not be hit before moving towards the upside, so we can now safely enter into our position. And we see that we managed to move towards our take profit target. Now let me show you when you should be entering into a short position. First, we need the candlestick to be touching the bottom of our forecast window. We will also need our forecast line to be pointing downwards, indicating that the trend will continue to the downside, and we can see that from our lower highs being printed. If we look at our candlestick color and we see that it is red, this means that our SSL hybrid conditions have been met. The same goes for the volume oscillator, because we can see that the line is positioned above our zero level. Now that all of our conditions have been met, let's map out our short position to make sure that we will not get stopped out based on the forecast line. So our stop loss will be brought to our most recent swing high, and as we can see, we shouldn't be moving towards our stop loss. So we can safely enter into our short position, and we will be targeting 1.5 times the risk. Once again, we had another successful trade. Overall, this seems like such an interesting and advanced indicator. I think that the author of this indicator did a really good job creating it. By combining this indicator with the other two that we have added to our chart, we are able to create a very profitable strategy alongside using this. I hope you enjoyed the video. If you have any questions, please ask them down in the comments section below. Like, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.